Hey guys, we got Michael Zuber in the building, TYLG. Michael, how you doing?
I'm doing wonderful, man. I just feel better when I talk to you. You know, you're just one of those type of guys. I feel good. Or I'm ready to go take the hill.
I love it. I love it.
Yeah.
I read a quote, it's always stuck with me. It said, "You're either giving energy or you're taking energy away." And so I made a commitment that I'm just going to be the giver.
Yeah, there's no question which side of the coin you're on.
Well, I appreciate you, man. I appreciate you.
Thank you. Thank you. Well done.
Ty, are we on? Are we streaming also?
Yeah, we're streaming to Facebook. I'm not sure. It looked like it was going.
Yeah, look live on Facebook.
Yeah, Facebook group. I think it's going live to the Facebook group.
There we are.
So, yeah, man, I love it. I love it. And I know the invitation went out. So, yeah, it looks like people are just starting to click on, and I can see all the handsome faces. Beautiful face, Renee. Yeah, so why don't we go ahead? Good to see you, Daniel. Caleb, you're undercover today. You're Donald G.
Oh yeah, that's weird. That's Donald G. A little weird.
Who is Donald G, I wonder?
His alter ego.
That's what he called it when he cold called. Hey, this is Donald G from ABC.
Super weird, super weird. We got David in the building. What's up, David? We got Daniel in the building. We got William. What's up, Will? Great to see you, man. We got Chris Byer in the building. We got Renee. We got Robert. We got Edwin. And everybody, Kat is on. Kat Dela Cruz. That is my VA. So if you guys want to say hello to Kat, she's here to make
Kat.
She's here to make sure that if I make any promises that I deliver on those promises.
Nice. And then we've got Naomi also, who's kind of also a backstop for us as well, who actually got the email out to everybody, and same thing, supports us. So thank you, Naomi.
Thank you so much, Naomi. Thank you.
Yeah.
You know what? Let's all give it up for Naomi. Let's all give it up for Naomi. Thank you. We got Nick Ramirez, Pablo Escobar himself of wholesaling. We got Hector. All right, guys, let's kick it off.
Love it. So why don't we go ahead and start off? We've got Mr. Michael Zuber. Most of you know him. He is the author, an incredible, in my opinion, one of the best people on YouTube, and just puts out a lot of great content, tons of content, several pieces, multiple pieces of content every single day. He does the financial news. I mean, just absolutely incredible. How you doing, Michael?
I'm doing well, Ty. Thank you for the opportunity. I look forward to these every chance I get.
I love it. Thank you for being with us. I think normally what we do is we start off. I know we've been doing different things where we'll do sometimes just purely streaming. Today we have a live audience because we want to do some Q&A and such. But I want to acknowledge, it's good to see Edward Vega. We haven't seen you in a while. It's great to see Robert, Christopher, Omar. Omar is logging in as we speak. I know he's a regular guest on your show as well, Michael. I want to just open it up. It's good to see Susan, Hector, Brian, Nick, Joe Perez, all of you here. Let's start it off with some wins, things that are working well, things that, you know, have gone great in the last week, or, you know, you're off to the new year, a great start. I'm gonna start it off with Caleb. Caleb, why don't you lead us off?
Can you guys hear me? Okay, cool.
It's a little scratchy, actually.
No good.
Looks like he's get the mic.
What about now?
All right.
Yeah.
All right. It started off the year pretty good. Getting busier as we go. Obviously, I'm a little bit newer to the industry, and so yeah, it's been good. I just got a contract signed yesterday. I reached out to them the day before. Ended up talking to them the next day, getting it signed. Shout out to Tino and Nick, both helping me on that deal. Closed actually one. I didn't tell Adrian this, but we actually closed one yesterday as well, and so. It's all good stuff, man. I mean, I'm excited. It's off to a good start, and I'm not looking to stop anytime soon. And so we're just going to take 21 and run with it. It's a marathon now.
So good. So good. And how many years have you been in the business, Caleb?
10 actually, longer than Adrian. No, I'm just kidding. It's about 3 months, so very new.
3 months. And how many contracts in the last 3 months?
3, probably before. So not, yeah.
Wow.
So a deal a month, and he's brand new. And were you in real estate before you started doing this work?
No, actually, I was in gym sales, was a health recruiter for a little bit. Ended up finding Adrian, took me under his wing, and now I'm here.
Love it. Great to see you rolling, man. Great to see you just growing and doing it and at a high level, man. I appreciate the way you participate with the group. So great job, Caleb. Love it.
Yeah, no, thank you guys.
Great job, Caleb. I always know someone is going somewhere when they ask really good questions. And there's not a day that goes by that this young man is not hitting me with some sort of question about either getting better or life, or just, there's always a good question. So if there's one thing we can learn from all of that, and it helped me too, is we have to continue to ask questions, right? Continue to ask why. When we were a kid, we would always ask why? And then our parents told us to shut up enough to where we stopped asking that question. And that is the best question that we could be asking ourselves, is more questions. So I love that. I love that. Let's keep the wins rolling. Good job, Caleb. What other wins do we have, ladies and gentlemen? Where are we winning? Robert Aguilar, you winning. Edwin Sanchez, you're always winning, brother. What wins do we have?
Yeah, right now we're basically closing a deal a week. So we want to keep it going right now. The one thing that we're trying to figure out how this whole buyer side thing works right now, because we need more listings, we need more inventory. So we're trying to push more out there to get more, because you're not getting a paycheck if you got a buyer right now.
Very true. Very true. I love it. Edwin, good work. How many listings are you guys at year to date?
Right now we were at 4. Now we only have 1 left. You know.
How many have you taken?
This year so far only 3. So I mean, not bad. You know, we got another one that we might have signed by the end of this week before we take a little bit of a break.
So good, Edwin. Great job, man.
So good.
But honestly, man, you guys are the guys that I look up to here, from Ty to everybody here, you know, even Caleb, new people. You guys inspire everybody else. I mean, we want to mimic what you guys do and learn from what you guys do, so someone can learn from us as well too, you know.
Amen, man. No, 100%. 100%. Thank you, Edwin. Great job, bud. Great momentum. And I love too, like, I see just you're pretty consistent. You're showing up, you're putting in the work. And and that's what this is all about. Like, we want to add massive value and build an amazing community where everybody's supporting and encouraging and elevating together. So, no, great job, brother. Thank you.
Love it. Omar, what wins do we have?
What's going on, guys? What's up? Thanks for having me here. I haven't been showing up too much, been going through a lot of stuff on my end, but I keep in contact with AD and Nick and Ty as well. So yeah, things are good. Wins are awesome. Wins for the week. I got to spend a good, our Tuesdays with Michael Zuber, talking about what's going on, what's happening, and talking about real estate. And with regards to other wins, every appointment you guys go on is a potential investment. I say that every single time. And I went on a listing appointment, not a purchase appointment. It was a listing appointment that became a purchase appointment. I left with a contract signed, and it was an $80,000 hour. So that stuff happens if you provide value for your clients and understand the end result when you show up. You got to go into it knowing which avenue you're going to go. So I want to share that with you guys, because we're doing business on a different level. Adrian, Ty, everybody that's on this screen. But I will tell you that every opportunity, you can create your own opportunity if you know what's cooking up here. So want to share that with you guys.
So good, Omar.
So good, Omar. Also, too, I just want to acknowledge Omar. I mean, have you had any challenges in the last 90 days?
A whole shitload. My dad passed away, and I've been physically just fucked up, straight up. I'll tell you that mentally. Real estate's a mental game. If you're not in it, if your partner's not supporting you, if your significant other is telling you, you shouldn't be working, it fucks with you. Straight up, it really does. And I now feel, we're February, my dad passed the day after Thanksgiving, and it's just been a, up and down roller coaster. And I've expressed it to Adrian for a while, and and as well with Michael, and Ty. And it's just, you got to go through it, man. I mean, we're going to go through all this crap in this business anyways, and then add on everything else that our life brings. So you just have to keep plowing through all the obstacles and challenges, because you will have them. It's just what you're going to do to keep moving.
I love it, dude. So good, man. I just wanted you to share that because I know there's always going to be a handful of people that are going through something. And I just got to say, dude, watching you and the way that you're able to, hey, and not only that, but be authentic and real. Like say, hey, this has been tough. I've had these moments and, and struggles and things, emotional struggles, physical struggle, whatever the case may be. So 2 or 3 things. One is to be authentic about it. But then obviously the bigger thing is to push through, to persevere through it, dude. So it's very inspiring for all of us. I know it is for me and Michael and Adrian. And dude, glad to have you on. We want to get you interactive on this call too, because I think you can bring a lot of value. So thank you for being here.
Absolutely. Thank you for having me.
Also, the beard game. I am incredibly jealous, dude. Your beard game is completely solid, dude. You're world class up there, man. Look at that.
Yep. A little gray, but it works.
It's crazy. I haven't shaved in like probably 2 weeks, man. And I'm trying hard, but man, I got a couple of gray whiskers down here. So anyway, all right. I'm just being playful. All right, let's one more win, Adrian.
Yeah.
Pull it out of somebody.
Hey, Adrian, can I share something?
Please.
I just wanted to say a big thank you to Omar and to Michael for, their YouTube morning sessions. I found myself spitting those words out to clients when they say, well, hey, Robert, we're thinking about doing something. What's your opinion? Where is the market headed? And I'm just regurgitating Michael and Omar's words, and it's getting me appointments. So thank you for Ty and you for making this connection, because those guys are great. So thanks to Michael and thanks to Omar. The check will be in the mail soon.
Yeah. I love it. I can't wait to spin that check.
Good stuff.
I love it, dude. I love it. That's what it's all about, right? It's all about squatting up. That's why we created this. It's all about creating the networks, and we're only as good as I don't want to say we're only as good as, but we're going to go as far as the people that we are surrounded by, right? The thoughts, the mindset. That's why I love talking to Omar. I love watching Michael Zuber's show, because every single time I watch it, I'm like, all right, I don't know that. Let's go figure that out. Or what did he just say? And I'm dictionary and I got you. So it's good. So thank you, Michael. Thank you for all that you do, brother. I'm really excited for today.
Very welcome. Very welcome.
I love it. So why don't we get right into it? If you have questions, post them in the chat. Thank you, everybody. By the way, amazing. Everybody's muting themselves. We don't have, Taco Bell drive-through orders. Where everybody's managing themselves in a very powerful way. So thank you for that. However, I want to just encourage you, post your any questions that you have in the chat, right? So we always say this jokingly. It's a quote from the Wolf of Wall Street, but we should be on our hands and knees giving thanks that we have, obviously, Michael Zuber here. So Michael, thank you for being on.
Oh, you're very welcome. I appreciate the opportunity. Let me just say a couple of things. First about Omar and then about you, Ty, because again, I'm lucky enough to have seen Omar weekly. He never missed a scheduled appointment. We're on Tuesdays at 9 a.m. We start at 9 or 9:15. And yes, he's been through some stuff recently. He never missed a day. He has been raw and authentic. You can go back. He has a playlist on my channel that probably has 35 or 40 hours of material. 10 to 20 minute sections. Everything is titled with what that video is. And I remember a video that he made me cry on when he was talking about his dad and opening the restaurant and all of that. And you know, he is authentic. That word you used is awesome. And I think he's also slow playing the wins. I don't know if he just doesn't want to point at the scoreboard because it's like rattling off so fast. He's been crushing it the last couple of weeks. So Omar, thank you. You are a true blessing and a leader, and I look forward to Tuesdays, my friend.
Thank you, buddy.
Yeah.
Appreciate that very much. Thanks, guys, for having this, man. This is cool.
You got it. And then Ty, you are a big part of my week on my channel because again, I do stuff daily. But I know I have you 10 o'clock on Fridays where we're going to do a weekly review, right? I'm in it every day, but knowing that I can come up, lift my head up on Fridays and go, wow, each day was interesting, but what were the highlights of the week? And to have you come in, having watched everything and go bang, 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 much appreciated. And then Adrian, of course, for the energy and leadership and introductions you give everyone. So thank you, everybody.
I love it. So I love it. Thank you, Michael. So let me just jump into it. There's been a lot of concern and I sent you, we're going to go to that Facebook little image I sent. We're going to do that toward the end. And we've got our good friend, Alex Lear on, who I think I'm going to cue him up. So I'm kind of queuing him up later, 20 minutes from now, we'll cue Alex up and we'll have him interact on that specific conversation because I think it's a conversation worth having. But just overall, what are you seeing right now in financial news? What are you seeing in 2021? It's obviously we're in the middle of almost to the middle of February.
Yeah.
What are you seeing in the real estate economy in California and then just kind of nationally?
Yeah, let's actually start nationally and then go down. It's probably easier that way. So I think nationally speaking, it goes without question, we are going to spend a gargantuan amount of money, right? Last year, and we'll hit this again later. Last year, the $3.3 trillion CARES Act followed by a $600 or $900 billion. Wait, we spent over $4 trillion on stimulus. That's what it was called. That's a lot of dollars created. And we're about to do that again. And I'm afraid make 4 trillion look small, right? We got 1.9 on deck. That's going to happen. But I think we need to be on the lookout for what's behind that, which is going to be an infrastructure bill. And that's going to be 3, 4, 5, 6 trillion dollars. So the first thing to realize is we have a lot of currency being created, right? Right now, it's not so inflationary because we're sitting on dry powder, right? The us, the consumers, last time I checked, had $1.3 trillion in excess savings over what we normally would have. So because when you just have money, but it's not currency, it's not moving, it's not buying and trading, it doesn't do anything, right? So the simple act of having more money, if it's not moving and transacting, is not totally irrelevant, but not a problem. But now we go to what I have been calling for on the daily financial news is we are just about out of this dark tunnel. 6 months ago, I said, you know what, there's a little light. And now I've been telling you the light's getting closer. And, we are in the final lap, the final turn, and we're going to get out of this because of vaccines or herd immunity or states will open up and stop being stupid, whatever it is. We're going to get closer and closer every day to being something similar to what we were last year. And what does that mean? That means we are about to spend a hell of a lot of money. This currency that's been sitting idle is about to go nuts. So, we're going to go out to eat. We're going to go shopping. We're going to go vacation. We're going to go and go and go. So that's going to happen. That's going to be inflationary because one thing we haven't done is we haven't created more stuff. Oops. Yeah, so we haven't created more stuff, right? So right now, the old adage is inflation is caused by too many dollars chasing too few things. We are about to see that up close and personal. That's going to be a problem. However, we all play in the number one asset that's protected by inflation, both in value and in income, called real estate. More specifically, residential real estate. I am very excited by what's coming. Just our conversation with Omar, what's today, Wednesday? Just yesterday. He's talking about, dude, I am having owners call me going, what's my house worth? And they're shocked by what I tell them. This is just starting. I told people this was coming. You wait until late March or April, the freaking mom and pop homeowners who've been sitting on their ass for a year are going to go, oh my God, I got an extra 20, 40, 50 grand in if you're in California, 50 grand in equity. And you're going to go, I want a nicer house. I want a newer house. I want to be on the golf course. I want a 2-story, whatever, right?
Yep.
Dude, consumers are going to be consumers and they're going to transact. And the beauty for all of you is that's 2 transactions. I got to sell what I got to buy what I want. It's going to be bananas. And then you add on top of that, this 15K first time buyer tax credit, which may come in. You could very quickly have the busiest year you've ever had in 2021. I really see that coming. Yeah, go ahead. Yeah. And then on top of that, what happens next is you have to watch the 10-year Treasury. I told everybody January 1st, if you put a gun to my head and I only could look at one metric, I'd look at the 10-year Treasury. Why? The 10-year Treasury is the first, it's kind of like the canary in the coal mine for real estate, if you understand the dominoes, right? The 10-year Treasury, when it starts to rise, that's what banks look at because nobody really takes a mortgage 30 years. They use the 10-year to kind of justify their risk management. So as that rises, you will see the 30-year fixed rate mortgages rise. And we saw a taste of that in early January when there was the thing that happened in DC, right? For a week, rates went up and it hit the 30-year market. It hit it by 1/4 or 3/8 of a percentage. So again, you got to watch the 10-year Treasury. It is not going to like the inflation that it sees coming. The banks, insurance funds, they are going to demand a higher interest rate very soon. The Fed might be able to keep them low for 2021. They are not going to be able to do that in 2022. So if you're going to buy an investment house, if you're going to upgrade your house, this is going to be that one little tight window that's perfect. You want to go get the best price with the lowest interest rate, it's this year. The Fed is going to lose control of the 10-year Treasury. It's at 1.14 today or 1.15 today. It's going to creep up to 1.3 probably by the end of March, middle of April, be at 1.5 by the summer. And we could be knocking on the door of 2%. You get a 2% 10-year Treasury, there is no chance you have a 30-year mortgage below 3%. And all of that will affect payment. Payment affects price. And then we're on the other side of this. So that's kind of what's going on in a slow nutshell, I think.
So good. So good.
Strong.
I know a lot of people don't know about the $15,000 grant. I know, some of them, I saw some heads kind of turn when you said that.
Oh,
Put some emphasis and dialogue.
yeah.
on it.
Yeah. So right now, one of the proposals from the Biden administration, and I want to stress proposal, right? So proposal means it's a great idea by the smart guy at the top, but it hasn't worked its way through the Senate and the House. So what that means is there's still negotiations, right? So I'll talk about it at the proposal level. The proposal level says basically, if you're a first-time buyer and you buy a house, you can use the $15K at purchase as part of your down payment, which is very different than what Obama did 10 or 12 years ago, whenever that was, right? In Obama's case, you had to file your tax return and you got the 8K or 9K back. What they're talking about now is you can use it on the contract, on the purchase price. So if you are working in a market like Omar is, where it's freaking 300 grand, $15,000 is, what is that? 5%. Dude, the people don't even have to bring any money to the table. They go get an FHA loan and good to go. We are going to see prices skyrocket. So the question is, what do they put around the 15K tax credit? Is it income levels like the $1,400 stimulus? Like, do you have to make less than 100 grand to qualify? Maybe. Do you have to be a first-time buyer, like never bought before? Maybe. I read somewhere where you're called a first-time buyer if you haven't bought your home in 2 years. I saw that and lost my mind. If that happens, think about all of your clients who bought 5 years ago. All of them. All of them, if they're in California, are sitting on 50, 60, 100 grand in equity. Imagine if you could call them and say, hey, how would you like to sell that house that's 1950 build that you've got 150K in equity and get a 15K tax credit and we'll go buy something bigger, better, faster? That's going to be an awesome conversation to have as a real estate agent. So we have to stay tuned. We have to figure out, I think it's certain that it's going to happen, but what is uncertain are the rules. Like, how tight a box do they have it? Is it only people that are left-footed that have, one hand? I mean, how many rules do they have? I don't know.
I love it. Thank you for that. I just want to clarify too. So Edwin Sanchez had a good question, two good questions that were posted in the chat, and I'll ask those, Michael. He said, just wanted to make sure that you see rates down close to 2%. Can you explain? I think there might have been confusion of when you said the 10-year Treasury, and if it goes to 2%, how that actually affects what the 30-year rate will be. Can you just articulate that?
Yeah. So what I was calling for is the 10-year Treasury will get over 1.5% for sure and start heading to 2%. The 10-year, if that happens on the 10-year Treasury, 30-year mortgages by the start of January of next year will probably be 3 3/4 or 4%. There'll be a point, at least a point, if not a point and a quarter higher. That's why I'm telling you 2021 is the year to go get that 30-year fixed rate money. That's what makes residential real estate awesome, is you can get 30-year money. These people buying multifamily today, they could be in trouble. Now, multifamily meaning 5 and above. I'm not talking about fourplexes, right? Anything you get residential, go get that 30-year money. If you got a 5 or above or 50 or 500, you have interest rate risk. Nobody has talked about interest rate risk in 2 decades because we have seen interest rates go one way for 2 decades. Well, that's going to change. And the deal with commercial stuff, because I own them, is you have a 3, 5, 7, or 10-year term, and then you have to refi. And part of that valuation, NOI, cap rate, all that calculations is what your interest rate's going to be. And if you bought it at 3% and now your interest rate is 6%, the value of the building gets cut by 1/3. So people in apartments could, again, when interest rates jump, multifamily people are going to get hurt the most and the fastest.
Interesting. Very interesting.
Very interesting. It has me thinking about the builders also that are in building right now for those 5 units, 6 units, 10 units. They're projecting the ARV based off today. Wonder how many of them are really looking at what you're looking at and projecting ARV in the future.
They're not, right. If they're building a 10-unit building and they're going to get out sometime this year, it doesn't matter. It doesn't matter. But if they're just breaking ground or they're in zoning and they're 2 years out, that could be a problem.
Yeah.
Interesting. So Michael, you posted, I thought it was pretty cool. You posted a headline about Fresno. It looked like I'm assuming that was a Fresno bee.
It was.
And I thought that was interesting. I thought that was a nice flex. Why don't you just kind of, I don't think many people, yeah, right? I love it. I don't know.
That was a flex. Yeah.
Explain it a little bit, go into detail, tell that story and kind of how it relates in the back channel.
So I've been investing in Fresno, California for 20 years. Daily, and this is not an understatement. Daily, I get communications from people I don't know, anywhere between something nice and totally rude, basically saying I'm an idiot for investing in California. Just full stop, right? I'm an idiot. I'm like, whatever. And like, I should go invest in Texas. So that's when I put out that flex, it was to all those people that have been beating me up daily for years. So yesterday, the Fresno Bee, and now been validated by the New York Times and the Wall Street Journal, Fresno City, the city that I have invested in for 20 years, had the highest rental growth in the last 12 months.
Yeah.
Yeah.
Got a boy, Michael. That's good stuff.
But Texas, Michael, but Texas.
Come on, I can buy a place for $100,000 in Texas. Come on, Michael.
Oh, these people. The beauty of investing in California. And Omar and I talked about this yesterday. If you haven't seen Omar's interview yesterday about when to sell, you guys aren't paying attention. That might have been the best interview I've done this month. Because again, it's nice to know when to get in. It is super nice to know when to get out. And I've done that twice now. And we broke that down yesterday, and he's like, I'm going ham. I think he said his market's at a 51 affordability. Mine's at a 48. We're not going to get nervous till it's 23 or 24. Yep. Dude, let's go.
Let's go. That's awesome. Let's go.
All in. Love it.
Center of the table.
Let's go back. This is good because you just sparked another question, and I think it's important for the viewers. Some people understood it. We've explained it before in other videos, but I think it's something that should always be in the conversation. explain the affordability index, explain where to find it,
Mhm.
and maybe just kind of what are we really looking at, and explain that in a little more detail, please.
Yeah. So first step in this discussion, I have to give credit to the person introduced to me. His name is Bruce Norris. He used to reside in Southern California. He's now in Florida. I've been to several of his paid events. I respect Bruce Norris. And basically, when you go to a Bruce Norris event, you better bring your dictionary and your pencil, because he nerds out on the data. And I have a disadvantage because I'm a numbers person and I couldn't keep up. I had to go see him 2 or 3 times to figure it out, right? Which is saying something. But basically, he shows charts. And again, the beauty if you're in California is you just have to go to California Association of Realtor, right? CAR, and you can look up the affordability index for all of your cities. So basically, the story goes in California, the affordability index goes from 99 to 1. And the lower it is, the riskier it is. The affordability index is essentially made up of 3 important variables: price or value, right? Where you are, the average, right? So Fresno is like 337. San Francisco is probably like 1.8. So whatever your area is, that's 1. 2, average income for that area. Average income in Fresno is 58 grand. I don't know what it is in San Francisco. I'm sure it's 200 grand or 300 or something. And then interest rate. It's the combination of those 3 things that produce a payment that then allows you to take the payment into the average income. Remember, average income for Fresno is 58 grand. So the ratio basically goes, if half of the citizens in Fresno can afford to buy a home, you're safe. And that would be a ratio of 50. If the ratio falls to 25, either prices went way up, interest rates went way up, or incomes went down, right? And it's usually a combination of all 3. But the beauty is Bruce Norris has showed me for 3 decades, for my market, if I just watch the affordability, and it's why I invest in California, is because if you know the roller coaster ride, do you want to be in this or do you want to be in this? I want to be in this. I want to buy at the bottom, get at the top, buy at the bottom, get at the top. And California is the best market for this. So right now my market's 48. I don't even get nervous until it's like 24, 23. If my market ever got to 20 in the video with Omar yesterday, I told him I'd sell everything I own. And I would sit on a ton of cash until it blew up. And then I would come back, because it happened last time. Again, I've told you all about Norris Drive. I bought it as 107. It goes all the way to 264. It crashes to 75. And today it's worth 207. We're not even back to 265. We're not even back to the peak. So again, I watch it. You don't have to watch it a lot. Once a month is plenty. It doesn't move that fast. But we are on a trend where it's heading down. So I did the rough math, and I think I did this in Omar's presentation. My market, every single one of my houses would have to go up another 125 grand to take it from a 48 to a 22, 21, 22. And I will certainly sell if, every house I own, another 125 grand worth. I'd sell in a heartbeat.
Spot on. Love it, Michael. So this is the portion too. I'm going to encourage everybody. I don't see a lot of activity in the chat, and that's cool. No worries. Adrian and I and Omar can, keep firing away. But I want to encourage you, if you have questions, post it in the chat, and then myself or Adrian or we'll call on you. And then also too, Alex Lear, I'm going to come to you in about 7 minutes here. So just so we can have that conversation about the monetary policy, fiat currency, some of that. I think it's a high level conversation, but it's a conversation worth having. It's something we should talk about, be thinking about. So Adrian, more questions for Michael? Omar, questions for Michael?
We have Eric Allegado who's asking, so what's the play? Are you holding or are you dumping?
I am holding. I'm not holding. I'm buying. Right. Markets in California don't move that fast. Right. I talk about it like it happens tomorrow. Omar and I talked about this is an 18 to 24 month play minimum. So I am trying to buy and I've said this on my channel. The beauty of my channel is I just tell you what I'm doing. All of you have heard me say it. I'm buying as many single family homes as I can right now. They have to cash flow because I could be wrong, right? So I have to, because I'm going to add them to my portfolio. They got to cash flow, but I'll hold them. everything I buy, I am willing to hold to the day I die. But I also know if some idiot wants to come along and overpay, I will gladly sell it to them. So I am buying today, not holding, and certainly not selling.
I love it. I love it.
That's
Great.
awesome. Can I share, Adrian, Ty?
Yeah.
Please.
Hey, so after talking to Michael, and this is to agents that are out there, because I myself, I'm a broker agent as well, investor. If you guys pay attention to this affordability index, that means that all these sellers that are normal sellers are going to increase in value. Okay. That means you as agents can get positioned to, hey, you can take that listing a little bit higher because you know it's going to happen. That $120,000 that each of our properties have to appreciate still before we get to a 22 or 23% index, that's huge. So not only as the investor, you're going to be able to capitalize on your flips or your buy and holds for a year, year and a half, and you can cash flow and then you can sell later, 1031 that into another property. But as agents, and if you don't have the pockets yet of a bunch of money, then you can position yourselves so well as the professional in your area because you know this stuff. And you can get listings over the next guy or the next girl. Obviously, we're entrepreneurs, so there's other ways that we can go get our or go service our clients and provide the solutions. But pay attention to that, because the minute he said that, and we've been talking about it, I'm like, well, geez, I'm gonna be able to bring more value as a listing agent as well, because sometimes I don't buy the houses. We don't buy the houses. So throw that out there. I guarantee you nobody else is talking about this shit. Nobody.
100%.
So be that person in the market that knows what's up. So wanted to share that.
So good. So good.
So good.
On the listing and on the buyer end, when representing a buyer, how many buyers agents are explaining this to their buyers, right? And then on the flip, for those, because I know we have flippers on the call, for you flippers also, one thing Eddie and I did, we adjusted our margin a little bit. We adjusted our margin because we understand what this market is doing. So before, where we would be like, it's not making sense, it's too tight. It's like, well, no, we're gonna get multiple, let's run it. We're buying things that we typically wouldn't have bought before. So spot on, Omar. So good, dude.
Strong. We don't have a lot of questions, but actually, Renee, did you want to unmute and ask your question?
Yes. So everything you're saying, I actually enjoy it. I'm not very much of an analytic, but I take what I can and I appreciate it. So probably like other people on this call, where else is there information for maybe us visual learners, et cetera? And then, probably most of our clients, like what Omar was sharing, are not, you guys on the call. They just want to sell their house. They're going to get glazed over. Is there like a infographic, a one sheet, help us to kind of narrow this down to make it digestible for all different personality types?
So let's play this out a little bit, Renee. Let's think about your clients first, right? You're going on a listing appointment. You don't have the listing yet. You're one of 5 or 6 or 10 agents trying to get that listing. And let's come out of this a little bit unique, right? What city are you in, Renee?
I live in Los Angeles, but I'm like center city, so Hollywood.
All right. Okay. I don't know either one, so I'm just going to say LA. I don't know. Yeah. So something I would probably bring with me is I'd go to the California Association of Realtors CAR site, and I would look up LA Affordability Index. And the beauty of the index is it will show you, right? It'll start going this way until 2006 or 7, come back, and it'll show them where they are now. And then what you could do with that one graphic, it's just a line chart. All you have to do is show, this is where we are. This means we have one of 3 things can happen, right? We can see prices appreciate, assuming interest rates stay flat. If interest rates change, oh, there we go. Look at that.
Good job.
Yeah. So I don't know if Center City, is that a city or is that a?
I think we could just look at LA Metro. I think that's probably a good indicator.
Yeah. So what I would do is so this is the last quarterly report. You can get this in Excel and get the graph. I would use the graph for your area. Yeah. See, there's this series and you can make a graph out of it if you want it, but I wouldn't do that here, but that's the link right there. Excel series. That's the conversation I would probably have. basically showing them, because the thing I would tell them is we are not at a peak. Renee, a lot of novice real estate investors go, hey, we're at 1.2 million in LA today. In 2008, we were at 1.2 million. Run for the hills. You should be scared, right? Do you hear that sometimes?
Yeah.
For sure.
Yeah. Mhm.
Okay, what I would tell them is those people telling, if any other agent tells them that, they are idiots or naive, and let them pick which one they want. I don't care. Because what you need to realize is a 6.5% interest rate at 1.2 million is very different than 1.2 million at 3%.
Mhm.
What people don't realize, and I don't know why, it's these YouTube entertainers ruin it for everyone.
Yeah.
It's always about payment. Most people buy the house, it's their biggest asset they ever buy, and it's always on payment. I don't ever look, like when I was buying my condo in Mountain View, I didn't look at the price. I was going, God, how can I afford that monthly payment? That's all it is. And today, 1.2 is significantly less because the interest rate is half. We're not anywhere close to the peak.
Nope.
Spot on. Spot on. This is really, it's just a Google search away. It's so easy to find.
Cal.org. Yep.
And they publish it every month, right, Michael? They
do every month. Yeah. This one is summarized quarterly, but yeah, it's monthly. You can break it down monthly. Yeah.
Yeah,
Hey, Ty,
very easy.
if this is Alex, if I can dovetail onto that as well. I called, and Michael, first of all, nice to meet you. And secondly is I called Bruce Norris about the affordability index, because I called him and I go, look, I get the affordability index, but if you look at the Bay Area, it should be on an implosion right now based on the index, because when you balance it out. So I said, how do I recalibrate for regions? So this is something for everybody. Be smart enough to ask questions around your area. For example, our salaries are base salaries, but we have RSUs or restricted stock units where people are paid in compensation and equities in their companies. So as a result, it skews the affordability index to make you think, oh my God, there's no way this market can sustain. But in reality, the buyers that buy, they put so much down out of their equity portfolios that the numbers don't make sense in relationship to their salaries, but they have so much equity. So just make sure that you're mindful. If you're looking at it, question the numbers, just if they don't add up, why isn't it falling? Because that was one point for me that I drank Harry Dent's Kool-Aid so many times that I was like, I had the revolver loaded. I was like, no. It's gonna end. It's gonna end. The world's ending. It's got to stop.
I've watched this stuff. He's a one-trick pony. Anybody who tells me the same thing in any environment, they're going to be right once. Just like a broken clock.
That's exactly it.
Yeah.
So good. So good. I want to tee this up. And Alex, I want you to stay close. I think you're still out there. So
Sure.
A couple of things is that specifically, Alex said, I think yesterday, we talked early morning yesterday, and he sent me a screenshot of somebody who's pretty, in my world, I would say somebody who's very sophisticated financially, somebody that has a significant amount of assets, net worth, holding, somebody who, in my opinion, my perception was it's somebody who's wealthy and very, very well read on financial news and what's going on in financial markets. Now, in the post, in essence, and I'm going to pass it to Alex. I sent it to Michael, so Michael had a chance to review it. But ultimately, they talked about things such as fiat currency. They talked about the stock market, that it was, in essence, maybe artificial because of fiat currency, because of monetary policy, and that there's, I believe it quoted 25% more dollars in circulation that were just kind of made up out of thin air. Digital currency through the stimulus and that. So Alex, why don't you kind of maybe plug the gap and then maybe ask Michael a couple of questions, and I'll help as well where I can.
Sure. And again, part of this, and if I can back up for 1 second before we go forward, and Michael, one thing you just said about your market in California, I tell people this all the time when they go, oh, I'm leaving the state. Oh my God, California is going to fall into a hole. I go, I'm going to explain this, guys. Right now, San Francisco Bay is loaded with ships that were here in the 1800s when there was a gold rush, and everybody came in, sunk their ships, and ran to the hills and went broke. You can try and go run on a gold rusher. There is an economic base here in this state. Doesn't matter what they do, people are going to stay here. So if you want to stay in the game, just understand the game you're playing. So I love what you're doing there, first and foremost. So the question that I had, and this is where I went into a little bit of, wheel spinning, and this is partially because of the talk you had with the what the heck is his name?
Barry Habib.
Barry Habib. When Barry Habib was talking about the markets and the what's all the bullish reasons why the real estate market is so robust. One of the things that he was saying is that the more debt that is printed, then interest rates have to conversely fall. And I'm looking at, so he had said that, and then I'm reading this post from a guy in Tony Robbins Platt, and it was that he was talking about that, and I'm just reading it right now. For about a decade, we've seen an expansion of money supply at a rate of about 5.5%. However, 24% of the money supply was created in 2020 alone, based on the massive expansion of M2, which is basically money into the economy. And the forecasted expansion of 15% each year for the next 5 years. So what's happening is the feds are pouring so much. Picture if you had pure Kool-Aid and you keep pouring more water into it, eventually it gets diluted. And after a while, you lose the flavor. So I understand what's occurring. I understand all that. So, but I'm saying, okay, if that's going to happen and they're going to print all this money and push it into the economy, and that debt we know is weighing on the dollar, then shouldn't rates be forced to stay down versus having any real capacity to expand? That's probably the root of one of 25 questions I have out of this.
Yeah. So I think these are the conversations. As somebody who deploys hundreds, if not millions of dollars in capital, I think about these things. So as I look at the situation, first and foremost, to use your Kool-Aid analogy, right now you can put the the Kool-Aid is being poured into a pitcher, but not going anywhere. So it's technically, it may visually be dilutive, but nobody's tasting it. So that doesn't affect anybody. That's my whole point about $1.3 trillion sitting on the sidelines, dry powder. If they just pour money in and it sits in JP Morgan and sits in Wells Fargo and Bank of, it doesn't do anything. Yeah, it's diluted, but it's not buying anything. It's not paying anything off. It's not moving. So while M2 money supply is up, the currency or the velocity of money is down. That's a problem. That's what I think changes. I believe the velocity of money is about to go nuts because I have been watching the consumer for 20 years. The consumer has proven to me a couple of things over 20 years. One, we can conserve, AKA save, for moments in time when we're really afraid. Think 9/11. Think Great Recession and Bear Stearns just going out of business. Moments in time, we can save, and currency could not move. Money supply, money velocity is down. However, that eventually breaks because we are an economy based on consumers. 65 to 68% of our GDP is consumers. It's not government. It's not big business. It's not all these other factors. And I am willing to bet that consumers will continue to be consumers, and they are about to go ham starting in the summer. That is going to be what I think pushes up rates because we already have supply chain and inventory problems. You have to look for them, but that's what I do. General Motors announcement yesterday after hours, their earnings report, you can go look it up. They said because lack of chips, they have to throttle back production and they're going to sell 2 billion less cars. Do you think somebody's going to figure out how to make some more goddamn chips pretty soon? I'm going to guess so. Right. And then we have commodities racing higher. Copper, 8-year high. Oil higher than it's been in 2 years. We have the signs of inflation, and it's obviously within the Federal Reserve and all these people to lie to us. But I watch the individual commodities that you and I spend. I buy gas. I buy food. I have housing. Fresno real estate's up 11% in a year. I mean, these are real things. Medical costs. It's going to be interesting. I saw that Barry Habib, and I'm talking to him again on where's my calendar? Oh, the day after the Tony Robbins event. So on the 8th of March, I'm talking to Barry at 8 a.m. I'm going to ask him that question because I don't agree. I don't see how the 10-year Treasury could stay down in an environment where velocity goes up. That's where I think he and I disagree. I think velocity, because again, all that powder is just going to be sucked up in that vacuum. And then if really what it's going to be is if go back to all of your people who've owned home 5 years and call them and say, hey, have you ever thought about selling? Did you know you're sitting on $100,000 in equity? Wouldn't you like a nicer place? Because if that starts happening, inflation is going to round the corner because those are two transactions. There's a buyer and a seller on each side. There's probably that person you're buying from probably is also trading up because they're going from the golf course to the mansion. The real estate is such an engine of our economy that most people don't appreciate. And when it gets hot, it goes supernova. And I think we're on the cusp. And man, if this 15K credit comes in and everybody can participate, oh my God, like we've never seen before. So I'm more concerned.
Yeah. And along those lines, or adding to that is, material costs, for example, in the Bay Area right now, a sheet of plywood in San Francisco is $65 a sheet.
No, it's like $40 in Fresno. So yeah, they're all up. Commodities are up. The input costs are up. And oh, by the way, you throw in a $15 minimum wage, which they're talking about. Not only do you have input, now you have labor costs up. Freaking game over. There's no way the Fed can keep inflation down. There's just no chance.
And the cost of housing has to spiral, obviously, just based on pure hard cost.
That's why I own it. And oh, by the way, rents go up. And oh, by the way, residential property has 30-year fixed rate debt. If you're smart and you execute right now, you can get lifetime low 30-year rate. I mean, it may not be lifetime, but it'd be within a quarter, right? If you're buying a rental property 2 years from now, I'm going to guess you have a 4 on it. Not a 2, right? It'll be, 4 point something, not 2 point something. That's significant.
Huge. That was so good.
So good. So and I said it earlier, I'm going to say it again. We should be on our hands and knees.
No.
Thank you. It's a joke, Michael. It's a squat up joke. Thank you
Okay.
for being a good sport.
Fair enough.
So, Google the scene, actually, Wolf of Wall Street.
I will.
What he says, Leo DiCaprio, we should be on our hands and knees. He's talking about Steve Madden. Anyway, that's a whole nother. Sorry,
Got
guys.
it.
I got on a tangent. Question from Ryan Peterson. He asked, he's in Tahoe. He's seeing properties, shortage of rentals. Would you recommend buying holds in a crazy market like Tahoe?
So I have to ask, Tahoe, California or Tahoe, Nevada side, or does it matter? I don't know.
Ryan, go ahead and unmute yourself, bro.
Hey, what's going on? South Lake Tahoe. So primarily there's just like no housing there. And if you do find housing, and the rent rate is just ridiculous. For instance, if you wanted a house hack, you can get $1,200 a bedroom because there's a shortage of housing. But just on the low side, you can get a 2-bedroom, 1-bath shack here in South Lake Tahoe, 400 to 480 grand. It's crazy. Yeah. But the thing is they put a stop to the Airbnbs, and that was going to be my exit strategy for some of those properties. And so I don't know if I want to, if it's a smart idea to invest in long-term buy and holds if you're buying at such a high rate for like a 2-bedroom, 1-bath, even though you're getting a low interest rate. I don't know.
No, you got to run the numbers, man. Rule number 1 is cash flow. You have to be able to hold the asset forever, right? Every time I buy something, the day I sign, I intend to buy it, hold it forever. And then I let the market take over, right? If a 400 becomes 800, I sell it, no problem.
Right.
But the day I'm set up, I need to be able to hold it forever. I don't bet on appreciation. I don't bet on mortgage pay down. I don't bet on tax savings. None of that. It's got to really cash flow, right?
Right. And for sure. And then I appreciate that. Thank you so much. And it's good to be able to talk to you. I love your books and stuff. So, but yeah, it'll definitely cash flow. And there's a lot of properties. The thing is getting a hold of the people that own.
So let's play it out. I mean, I don't know Tahoe at all. So you said 400 grand. What's the rent going to be like?
Oh, easily $3,000. It's crazy.
Oh,
like
yeah,
if you look at it,
you
definitely cash flow. But people don't.
So who's renting them? Is it people from out of town or who's renting?
Nobody. They're buying them and they're just keeping them. And there's a minimal amount of homes that you can find. So like if let's just say I needed to rent a place right now, I would not be able to find one. It's just crazy because there's we have the ski resorts, we have the casinos, we have things like that. And essentially they want to have those properties when they want to come up, they have them. Fourth of July is huge in Tahoe. So they don't want to rent them, they don't want to sell them. So how would you even go about that? It's just crazy. There's these nice homes sitting there stagnant.
Yeah. So what I would be doing is I would be mailing. So what I would be doing is, and I'm sure you're doing this, I would be putting out mailers to people that have owned the home 10 years or more.
Okay.
I would not hit anybody that's less than 2 or 3 years. Because basically again, this is just one guy's opinion with 30 seconds of thinking about it. Right now you have a new crop of buyers who have no interest in selling until the next economic cycle. They're just not going to sell, right? They came in with their IPO money. They came in with this, they came in with that. They're good to go. They'll only think about selling that second home when the next recession happens. So all of those people are off your target list. Don't even bother to waste the time. What I would do is I go, hey, who's been here for 10 years or more? Because then you'll be like, do you still come back? Have you moved? Because some people buy in Tahoe when they live in California and then life took them to the East Coast and they've never been back.
Right.
So if you can look for people who own in Tahoe that no longer reside in California or Nevada that are on the East Coast, life events. And then I'm sure you're doing probate. People die all the time. Figure out who those people are. I would be tightening up my mailers to go after people that are most likely to say yes. And again, if you've been there 10 years, you have likely no idea how nuts it's been.
Right.
The last 2 years. Those are the people you got to find.
Absolutely. I appreciate that. Thank you.
Love it. Great question, Ryan.
Absolutely.
Thank you, man.
Thanks.
Love it. Love it. Love it. If anyone else has a question, post it in the chat. It looks like we were pretty light on questions, which is totally cool. I want to go to Omar and to Adrian, and then I do have something. Stay on because we are going to do something else, promote. So think about Adrian or Omar if you have more questions, or even Alex. Michael, what is the best place? Where would you like people to follow you, find you, spend more time with you, get to know you better? I think I know, but what do you like? What do you prefer to drive the traffic to?
Yeah, it's the YouTube channel. Go to YouTube. It's youtube.com/one rental at a time. I do have an Instagram page, one rental at a time. If you want to hear about a 15-year journey from nothing to financial freedom, you go to Amazon or Audible. The book's there. Yeah, it's just a review of our story.
I love it, Michael. And I just want to share that I put my email on my screen name. And so Michael was incredibly generous to Adrian and I in the group, the show. He loves our community. He gives generously. Michael always gives generously to our community. And so what he did is he's actually shipping us books specifically. And what we're going to do is we're going to give them away. So what I want to do is this. If you want to, we're going to give away, I would say just in the next week or so, we'll give away like 10 books. So all you have to do is 2 things. Number 1, go subscribe to Michael's channel, go to YouTube, subscribe to his channel. And then number 2 is take a screenshot of it and then email it to us. Email it to me, Ty@TYLG123. And then that way, and then like I said, he's going to ship us a bunch of books. They're probably on their way. And we're going to give away 10 books this week. So thank you all for being here. Adrian or Omar, last comments, questions, thoughts?
No, my only question is, Michael, when you're looking at those really volatile markets, like for instance, Big Bear, Tahoe, where Big Bear in the middle of the year last year shut down all Airbnb. What is your thought on buying there? What is your thought on buying a lot of property there? It cash flows on the Airbnb side all day long, but what happens when they shut us down for 6, 7, 8 months?
Yeah, so you got to remember who I am, and I only can answer the questions who I am. I'm a month-to-month or year lease guy. I've never gotten into dailies. I've certainly thought about it. Omar and I talked about it. In fact, Omar schooled me the other day, and he told me he told me after we recorded, I stopped recording. He goes, "Get off your dumb ass and go get an Airbnb," which I appreciate. Thanks, Omar. But yeah, I've never done dailies, so it's hard for me to say. And there is outside legislation. California loves to, get in our business. But I know plenty of people, including Omar, that Airbnb is awesome. He's printing money in I think Lake Havasu. So it's hard for me to say. What I would tell you is always have a plan B, right? If it cash flows Airbnb at like 20 days rented, but it doesn't cash flow as a month-to-month rental, you got to measure your risks, right? You should have a plan B, especially if you're in an environment where local or city or state legislation could just shut you down, right? What's plan B?
Love it. Love
Good.
it.
So good, Michael.
So good.
Omar?
Yeah, you guys hear me? So I have a question, and maybe it's a statement question for you, Michael. We talk about it a lot. So everybody listens or everybody's hearing this. Right now, this market, you have to figure out how to bring more value. And we're all in the real estate game. And there's a lot of people that are wanting to sell their homes. And they might sell them a lot quicker than waiting for the market to appreciate. But just know, because you've been in the community, you've been understanding these numbers, that this is where the opportunity lies. And I want you to explain that, Michael, because we talk about it, about right now, everybody wants an FHA house. So let's talk about that just a little bit.
Yeah, I get asked all the time, what's the number one investment idea right now? And Omar and I think we hit this like 3 or 4, maybe 6 weeks ago. The number one thing to do right now is to buy a dump. So let's define what that is. Right now, all these people running around buying, the house has to qualify FHA, which means it has to go through inspections and appraisals. It doesn't have to be perfect, but it has to be close to perfect. So what you need to do today is you need to go buy stuff not even close to perfect, right? It needs to be structurally sound, because I don't think I would want to do a footprint like a master bath addition or anything right now. The city's shut down. Permits are too much, but go buy a dump. And I'll give you a real example, right? Talking about wins. I'm closing on a house tomorrow for 140 grand that had a squatter in it for 9 months. Thank you, COVID. Didn't pay their last landlord. We finally got him out, thanks to my attorney that I've had on my channel. And we're going to spend about 42 grand fixing it up to make it perfect. And we're going to probably sell it for 299, maybe 309 in about 100 days. So we get past the limits. That's what the goal is today. Go buy the ugliest, dirtiest, smelliest thing. And again, Omar had a perfect example. Was that last week you walked through that 1970s house with the like square mirrors on the wall and green carpet? Was that last week?
Yeah, it was.
That was nuts. That's the exact stuff you should be buying today, because no owner wants that. No owner wants to walk into a house that smells like cats, that looks like there's literally track marks through their carpet that hasn't been changed since the 1970s. They like walk in, walk out. They don't care. They don't care if it's $200,000 under market. They don't have the 50 grand to fix it. So go buy those. JV, get your money right, whatever it is, put your 50, 60 grand in, go double your money. If you're buying right today, you should double your repair money every time. That's just how hot the market is today. That's what to do. That's the hottest part of the market today. It's just
so good. Wait, hold on. So you wait, I shouldn't be buying AMC stock? I should
GameStop, AMC.
It's funny. Good answer. So good.
I love it. I know we're at the hour, or maybe even a little over. Alex Lair, Jose, Perla, Robert Watkins. Anyone else have any questions for Michael? Okay, Michael, thank you so much for being on. Again, subscribe to his YouTube channel at One Rental at a Time. Send me a screenshot of it. Send it, email it to ty@tylg.com. Also, guess what I would need? I didn't give good instructions. I need your mailing address, right? So in order for me to ship the book to you, I need your mailing address. So I forgot that. So please subscribe to Michael, his financial news. I don't even listen to the news anymore. I only listen to Michael's stuff because it's a nice summary and it's what's going on in the real estate industry. Any last words, Adrian?
Yeah, no, thank you, Michael, so much. You guys make sure you are following him. Michael, I really appreciate you, your knowledge, and everything that you give towards the community. You are the definition of contribution in this game. And I thank you so much, man. Yes, please, let's all give it up for Michael.
I do want to let each and every single one of you know that next week we are having another great call. Michael, if you can be there, that would be awesome. We're actually having Tony Robbins, the Tony Robbins Network. They're coming on. They're doing a call for us. You guys can't miss next week. I'm so excited. And then also, you guys, make sure you go back and you watch that interview that Michael did with Omar yesterday. It is highly, highly impactful. A lot of value on there. So make sure you guys do that sometime today or before the end of the week. I appreciate each and every single one of you. TYLG.
I love it. Thank you, guys. Next week, we're going to have someone from Tony Robbins. We're going to do some sales, persuasion, some personal power. It's going to be hot. Michael's actually attending UPW with us, the virtual event in March. So we're excited. Obviously, Alex Lear is a 6-figure platinum partner with Tony Robbins. There's a lot of power in the proximity to spend some time with Tony Robbins. So come. Do yourself a favor also. Invite some people in your office. Even, you know, that one guy or gal that kind of annoys you, invite them because they need it. They need it even worse, even more than, you know what I mean? So please invite some friends, family. It's going to be dynamic. We'll look forward to seeing you guys next week. Thank you so much for all your support.
Thank you all. Have a great day.
Thanks, guys. We'll see you later. Thank you.